Hey everyone, and welcome to today's DeFi Drop featuring Aya from Upshift, a vault platform that lets retail access DeFi and CeFi strategies curated by institutional funds. On Upshift, you can find business trade vaults, concentrated liquidity vaults, looping vaults, and more. And you'll never miss an opportunity online again. Welcome, Aya. It's great to have you.
Thank you for having me.
No worries. I know you're super busy, so we'll get cracking. But thanks very much for hopping on. And obviously, today was a big day for you guys with the launch of your new
Neutral.
vault.
Yeah, we're very, very excited about our neutral K3 Vault. The team is just truly tremendous. And so watching them get that vault to fruition and also just seeing how much more demand the market has for that vault, we're hoping to increase caps and keep the momentum going.
50 million in 20 minutes? 18 minutes, I think.
It was actually 16 minutes. I think we rounded up, but yes, it was very, very fast. And I think the key differentiation on this is it was fully organic. Typically, with some of these pre-deposit vaults, you'll see potential private LP deals happening on the back end. You'll see some sort of investor who will come in and top up. This was purely organic, and so really, truly a testament to everything Neutral is built, and we're really excited for them.
Well, huge congrats. And we can probably touch on that in a bit. But on that subject, you guys are absolutely nailing it. 450 million in TVL. You only came out of stealth in April. So before we get into that, let's start with the bigger picture. Upshift's mission is to increase the return on every asset on chain. What does that mean in practice? And what gap in the DeFi landscape are you filling?
Yeah, so we've seen a very interesting transition in the ask that both asset issuers have had, protocols and ecosystems, as well as users in the space. And that has been, how do I tokenize or the vaultification of different strategies? And we think that Ethena really spearheaded this by making the basis trade tokenized. And that expanded the construct of what other strategies can we tokenize in a very similar way. And so, as you mentioned, there's a number of different strategies that are being tokenized and then made composable. And then also there's a number of different assets that are brought on chain so they can also be made composable. Today there is two things that make DeFi very differentiated. One is the 24-hour market that's very liquid for certain asset types. And then two is the competitive rates that you can borrow for assets that you probably couldn't borrow against in traditional finance. And those include anything between, a tokenized private credit fund that you probably wouldn't be able to borrow stable coins against in traditional markets, all the way to some of these, tokenized CeFi strategies, DeFi strategies, ARB strategies that you can also borrow against and make composable. And so I think those two things have made the DeFi flywheel really attractive, like I said, for asset issuers, for some of these protocols and ecosystems who want to expand the use cases, within their walls, and then also for users in the space who are looking for real yield and composable yield.
Real yield, right? And we're getting there. But so thank you very much. That was awesome. So on that lending, borrowing note, your USDC lending vault is particularly interesting. Over collateralized, KYC, KYB verified borrowers, and of course, real yield. Can you explain how this structure works and why it's more sustainable than most DeFi lending models?
Yeah, so DeFi historically has been built on over collateralized lending. And so the Up USDC vault that we have today is our stepping stone for our vault products and other products that we're working with different lending platforms, whether it's Morpho or Euler, to get listed and be made composable. And so we find it as a great middle ground for us to do a lot of the initial underwriting, for us to work with. Typically, these are receipt tokens of vaults that we already support in-house today, and for us to bring some more marketing for that underwriting in order to help whether it's a Morpho curator or an Euler curator, go through the underwriting process themselves. And so that has been a really great stepping stone for us to kind of leverage. The second piece on the over collateralized side is today, it leverages our August institutional ecosystem infrastructure. And so on the August side, you get a smart contract, which is, we call it a sub account, and you can trade within that sub account. And so what happens is you can actually get better LTVs if you borrow against an asset, but keep it within the walled garden and continue to trade that asset. And so it adds to your overall portfolio equity. And so we've actually found that we can also offer more competitive rates when it is done within that walled garden ecosystem. So I would say those are the two areas that gets us most excited on the UpUSDC side, and really helps us, again, when you think about the kind of Upshift Vault launch or launchpad almost per se, really helps a lot of these tokenized vaults become composable as a first step.
That's great. Yeah, we actually host a lot of these positions and these vaults on the Portals Explorer. So yeah, we push them, and we'll continue to do so. On the we'll go into August just now, because I'm fascinated by that as well and what you've done there. Before we get there, I just want to still pick apart a few other bits of Upshift. So many DeFi platforms rely on anonymous borrowers and uncollateralized loans. Why did Upshift choose the verified borrower model? And what impact does that have on security and yield consistency?
Look, I would say without a doubt, if you think about what has consistently performed through all of the market cycles in the industry, in my mind, Aave is really that gold standard, right? And the reason Aave works well, it is over collateralized. And the only downside is you don't necessarily know how loaned assets are used. And so we took it, one step further in that, today we support the over collateralized borrow on an institutional level. And so there's a minimum trade size. I would say on average, it tends to be in the $2 million mark. And then all of these borrowers go through KYC, KYB, and that actually enables us to do a lot more functionalities under the August brand for you to use the loaned assets for. So that could mean, going and trading on exchange and us using your Binance equity as collateral for a loan. That could mean trading OTC, let's say options, and that could mean, using that margin as well as collateral or equity for your position. Or you can just trade OTC spot. And so that really enables more of the prime suite that we think is really, really interesting and very, very sticky for the business. And so that's why we've gone with the over collateralized and KYC side. And then there's also, a number of different interesting avenues that we're exploring on the repo side of things that we also think, the market hasn't necessarily solved for that lives under the August side, again, for us to continue to bring some of these prime services more on chain. I mean, August was really born out of the fact, post FTX, that institutions cannot underwrite counterparty risk to CeFi. You don't know what the liabilities of one of these prime desks are. You have no idea who they're trading with. You have no idea what, their debt lines are and with whom. And so you have really very little accountability to be able to underwrite what their counterparty risk is. And so that for us is something that, is tested and clearly works in DeFi with our blue chips. And so, we wanted to bring the best of both worlds.
So can we chat a bit about August then? So it's clearly the backbone, right, of Upshift. I'd love to know a bit more about August. You founded it 2022. It's the prime brokerage, the DeFi prime brokerage. It's, I think, handling 7 billion in monthly volume, right? So yeah, can we talk a bit more about you've just touched on it a bit, but can we go a bit deeper on August, the infrastructure and how it impacts scalability?
I would say, I'm gonna refer back to this quite a bit because markets go through cycles, and I would say in crypto memory is very short. And so when you think about, risk just more broadly, the things that have protected platforms from surviving, crash after crash is risk controls and underwriting counterparty risk in a conservative way. And we take those two things very close to heart on the August side, and that's been the core backbone, as you mentioned, for Upshift. Now, what does that mean? What it means is that there's always controls in place for how funds are used and how traders manage funds within a walled garden. That's worked successfully on the exchange side of things. And so for us, it was how do we bring that on chain? Today, August and Upshift use multi-sigs. And so fully non-custodial wallets and vaults in order for traders to manage positions. And so what does that mean? That means that it requires multi-signature across a number of different actions in order for funds to be used or moved, withdrawn or deposited. And so that's really, really important. And actually what we've seen is the, again, short-term memory, click in here where we've seen demand for users who want to move fast and break things, ask for one signature vaults. That is a huge risk to the industry because as we've seen time and time again, there is nothing that stops you. If we had another Black Friday happen this past Friday, great example. If you are getting margin called on an exchange or on Hyperliquid or just mass liquidated, and you are, potentially a curator on one of these single signature vaults, what's holding you from withdrawing from a vault in order to top up on a margin call somewhere else in your fund or across other positions? And today that answer is nothing for a lot of these different platforms. For us, we view that as a huge, huge risk. You can tie that with as many legal agreements as you want to tie it with. We've seen how that goes down with 3 euros just going into, jurisdictions where you can't necessarily press charges against them. And that doesn't always work. DeFi works. And so for us, it's how do we, create all of the hedges so that we have the risks and checks in place to avoid that kind of scenario. And so that's, really how the infrastructure was built. And then on the risk side, we're told probably every day that our LTVs are far more conservative than market rates. And we're proud of that. We haven't had any liquidation happen across the business over the course of 3 years. And that's on, 7 billion in monthly volume. And that is something we're truly, truly proud of. We may not have the most competitive LTVs that you're looking for today, but we're not looking to compete on that level. We're looking to make things institutional grade. We don't want mass liquidations. We don't want waterfall liquidations. That's not the best user experience. And so we're trying to bring that institutional mindset, into DeFi. And a lot of times that may mean more education, but I think we've done a great job of doing so and protecting all of our partners from, things that happened, for example, on Friday. We didn't have any clients who were impacted by Friday's move.
This last 5 days, or especially on that day, has been a huge example on what is possible in terms of security and safety in this space, right? And the real OGs stood out, and a lot of big brands stood out, and their strategies worked. And I think it wasn't good, but it did prove that these strategies and these setups are actually working. We just had our company all hands today at Portals, and our founder Suhail, who's been building in DeFi since day one, he gave us a pretty good rundown on everything and how rock solid this space is actually going to become as a result of it, and how a lot of protocols have already proven to be rock solid. So big brands stood out, and kudos to you guys.
Thanks. No, and again to you as well. And I think it goes to show, at least for your CEO, he has gone through those multiple market cycles. And so, whether it is doubling down on what oracles you're using, making sure you have redundancy on your APIs. I mean, you all play a very large role in that for the industry. And so, also major kudos to you all for supporting that.
Thanks. Well, as you know, I've got to get my kids in 15 minutes, so I've got to get through this. But look, your partnerships are huge, right? Let's talk a bit more about these. Back in the day, you used terminology VAAS, Vaults as a Service. Right now, you've ditched that. Okay, you've ditched that. This is, we talk now about your partnerships with DeFi protocols and blockchains just to launch vaults, right? It's an exciting model that lets protocols offer curated strategies to their own users. But Upshift has also launched vaults previously with the likes of Ethena, Kelp, Resolv, which I've just been involved with recently on your platform and your vault and their vaults. But can you tell us a bit more about this model and where it's going from here?
Sure. Yeah, I would say there's 3 buckets of vault proposals that we see ourselves getting involved in, and we see a lot of demand. The first is on the pre-deposit vault side. Now, where we will not get involved is we will not get involved in a pre-deposit vault where the funds are not going to get utilized into real yielding strategies on the other side. And so if you take, for example, the neutral vault that we just launched, we're incredibly bullish on K3, we're incredibly bullish on neutral, and we're bullish on the ability for us to then be able to scale the capital in that vault into actually real yielding strategies on the other side. And so those are the pre-deposit vaults that get us really excited, especially for some of these new ecosystems. It's not just capital, mercenary capital that's staying there for airdrops and is going to move the minute those airdrops get dumped, but it's really for differentiated strategies that we're most bullish about. The second category that we've seen is as it pertains to ecosystem and protocol vaults. As you mentioned, we're very excited about our partnership with Resolv, with Kelp. And so it's really figuring out how do we make these strategies more composable for the Resolv ecosystem, for Kelp across all chains, and across, CeFi, across every wallet integration into some of these digital asset treasuries. And so that's where we play a lot more of the partnership role in terms of really doubling down on making sure that we can get the receipt token composable across all facets of the business. And then the last is as it pertains to tokenized fund strategies. And so this has been a newer project for us, and it's one that we've been super excited about. And there's a lot of synergies with August, the institutional business, because we are the only platform today that allows you to not only trade in DeFi, but also have your CeFi positions, your OTC positions, options, and a loan all in one place. And so you really do get not only the call it 4DeFi or whatever multi-sig service in order to facilitate the trading, but you also get the prime pieces on top in order to be able to put all of that into the equity of one position and borrow against the entire vault itself. So that gets us really excited, and I think we're very differentiated in that sense.
Big time. And it gives you free reign to go in so many different directions as well now that you've built on this platform and these foundations. Can we talk a bit about the ERC 4626 contract, the vault standard, please? Obviously, we're big fans of it, Portals. Why was this standard the right choice for Upshift? How does it enhance composability across DeFi, you guys?
Yeah, of course. I mean, look, ERC 4626, it's currently the most battle-tested vault standard, and it's the most integrated. I mean, you all know this best. It allows for us to, integrate Upshift receipt tokens to platforms like a DeFi Llama, work very closely with you all on the portal side of things. And so it's natively composable and allows us to seamlessly integrate across, whether it's a Morpho, Pendle, and things of that nature. We have seen, requests for multi-asset deposit increase over time. And so it'll be interesting to see what standards are used for that. And then integrations for that, moving forward on the composability side. But to your point, ERC 4626 is very much the preferred standard today.
We haven't really touched on your API though, so I will do that now. Your API gives developers access to vault data, of course, performance analytics, user points. How are builders using it today? Let's get an understanding from their perspective, or your perspective on them, and what kinds of integrations do you hope to see next?
Yeah, it's a great question. I mean, I would say today, the integrations that we've been focused on and how folks are using the APIs is very DeFi focused. So, they will plug in order to calculate their overall position exposures relative to portfolio is what we've seen, or in order to be able to use that position as, collateral for, call it a loan on the other side. Where we're most excited in the next stage of that integration for us is going to be on the Web 2 side of things. And so thinking about wallets, thinking about, ideally brokerage platforms, trading platforms. And so how are we going to make those integrations happen there? And then what do those platforms need from us on the API side in order to facilitate?
That's amazing, Alpha.
We hope so. Coming soon.
Okay, so we're going to wrap up a bit. I've got a couple more, but let's zoom out. Okay, we're in a phase where real yield and institutional grade infrastructure are defining the next cycle of DeFi. where do you see Upshift's role in shaping that future?
Yeah, I mean, for us, what we're most excited about is, again, twofold. The tokenization of all assets, so working with asset issuers as they look to bring more assets on chain. It is truly happening everywhere. If you think about, all of the different financial institutions and their integrations of blockchain tech, the speed of which that has picked up over the last 8 to 10 months has been tremendous. And so, they will all need the picks and shovels that we have battle tested on the Upshift side. Today, we're currently integrated across 23 blockchains, have 800 assets where we have written oracles for and can underwrite the risk, and have integrated into over 80 protocols. And so that library is something that's very, very useful for a lot of these platforms. And then two, the vaultification of all of these different things. And so what we've seen is Earn is back, and it's back at scale. And so everyone's looking for another Earn platform. Stablecoin, yield-bearing stablecoins, whether or not you want to call them a stablecoin, yield-bearing stablecoins have, and some of these on-chain tokenized money market funds, they have normalized the idea that your stablecoins or your cash when sitting idle should earn some yield. Your Bank of America savings account earning 0.2% is no longer a viable option, right? And so in that world where you're looking for yield across all idle capital, what are the risk parameters that you're comfortable taking? Are you just comfortable with money market around 4 or 5, or are you comfortable with higher risk at 10? And so I think that's where we're seeing a lot of the conversation go, and that's an area we're most excited to be most active in.
That's awesome, really exciting, and obviously keep us informed with all your activities. We'd love to support from Portals and support you guys from Explorer in any of your positions. So I have a final question. And this final question is one that we ask everyone. It's a bit of a game.
Uh-oh.
Okay, I'll start again. Today's total TVL of DeFi, as per DeFi Llama, is 156 billion. Big change from last week, but it's 156 billion today. What's your prediction for this number at midnight on the 31st of December 2025? So New Year's Eve.
That's a good question. I would say 250 mil. I think we're still going to see, or Bill, sorry. I think we're still going to see a lot of volatility between now and year end. And even though we've had a large deleveraging in the market, we're still all becoming macro traders, and I'm not sure that volatility is done quite yet with us between now and year end, whether it's on tariffs, whether it's on labor stats, whether it's on, interest rates. And so the market is still going to react, in high correlation to that. And so we'll see what that looks like between now and year end.
250 billion.
Yes.
Good answer. I mean, there is no good answer, but it's an answer, and it's going down. So I don't know how this is going to be closer. Imagine I'm doing these podcasts in December, right? Early December. It's not fair.
Yes.
Because that.
Yeah.
So we're going to have
That's
to
fair,
call
that's
the
fair.
last one. The last one will have to be called maybe end of November, I reckon. What do you think? Towards the end of November. Then it levels the playing field a bit.
You know what? It would be interesting to see what someone says December 15th. And you never know. We've had years where the last week of December is very quiet. And then we've had years where the last week of December is the activity makes up for the entire year. Yeah. Absolutely mental. So, even the person who comes in on December 15th could be completely off. So I would say keep it open until the 31st. You never know. It's crypto.
I know. Anything can happen, as we've just seen.
Anything can happen.
Anything can happen. Or it could be 250 billion the day before, right? And then then the guy who last week, I think it was Anil from C Sigma, no, it wasn't, it was Darren from iPool Fusion. He's gone in for a good 201, right?
Oh,
so
wow.
then he could win in a 24-hour period. But anyway, let's see.
All right,
it's been
fingers crossed.
really awesome having you on. Thank you so much. This is going to be incredibly useful for everyone when we start sharing this. Thank you. And well done.
Thank you for having me. And thanks for everything that Portals does for the space as well. You guys are tremendous.